All right, guys. Glad to have everybody here, and I would I'll try my best to make sure that this particular session of 1 hour approximately is worthwhile for you. As you must have observed in the last couple of sessions, that the focus of sorry, I was able to somehow hear myself. Okay, so as you would have observed in the last two sessions, the focus has been specifically on finance, right? And what is the, and today's objective is to make you understand that what are the career options for finance aspirants, people who want to specifically make a career in financial data science, right? So there is actually a role called as financial data scientist as well, which is an umbrella role. It has a lot of sub roles behind it, and we will have a few discussions around that. Please feel free to stop me wherever you have a question. I'll take the question. If I see that I'm going to cover that question anyhow in my session, then I will park lot it. But I'll try and cover all the questions that come along. So let me first tell you a story, a small story, right? Let's say, uh, what does a consultant do to propose his girlfriend? And this is a story that involves me as well. So when I was proposing my girlfriend, and I'm talking about 20 years, I mean, not 20 years ago, but approximately 15, 16 years ago, when I was proposing my girlfriend, now who's my wife, what is the algorithm that I use, right? And what I want to show with this example is that data science is application in all various domains. It touches everybody's lives. There is no industry in the world which is not touched. There is no person in the world who's digitally connected is not touched by data science. So let's look at the algorithm that or the process that I followed, right? And maybe you can also follow the same. So before proposing, of course, I wanted to get the yes, right? And the girlfriend that I was proposing, I had some data around her because she was also one of my best friends. So I wanted to understand that. I wanted to make sure that she gives me a yes when I propose. So first thing I did is pros and cons analysis, which is really advantage and disadvantage analysis, and then I gave each pro and con a weight. A weight is like a importance or priority, right? So that became a weighted pros and cons analysis. And then I did a SWOT analysis. So I was not satisfied with pros and cons because it did not give me a conclusive result. Then I did something called as a SWOT analysis, which is strength, weakness, opportunities, and threats, right? Which is something kind of same thing that you would have seen, when, let's say, Indian cricket team, when they takes a new player. So in the newspapers or news articles, you see strength and weakness and opportunity threats analysis done for that particular player, right? So I just kind of did that on my life with that girl. And then I used a very simple regression, which basically means that what are the factors, let's say X, Y, Z. Suppose these are the three factors on the basis of which the result or the outcome will depend, which is to get the yes, right? And how do I know these? How did I know these factors? Yeah, I mean, in the world, I was not the only person who had proposed to a girl. There were a lot of people who had proposed to a girl. So I did some data analysis of, what kind of people actually usually get yes, and what are the factors that influence girls' decision to be yes. And I included the specific factors of my girlfriend as well into it. And then accordingly, I build a model. A model is really nothing but an equation which gave some parameter value to each one of these variables, and that gave me the likelihood of getting a yes from my girlfriend. Okay, I mean, I did get a yes because now we've been married for almost 13 plus years now. So, well, good point. That regression does not give a likelihood, but logistic regression does, right? A very good catch there. So I didn't want to get into too much of details of that, but yes, the logistic regression would give you a likelihood, which is a classification model, right, of getting a yes or a no variable. Yes, right. Good point. Good catch there, Arkupavu. But anyway, Today also we will have a little bit of discussion on what is the difference between a classification algorithm like logistic regression and supervised algorithms where you label the data like regression and so forth. But we'll get into that detail later. But I wanted to tell you that even when you're deciding which cloth to wear, you decide on the basis of some data points, right? You open the wardrobe, you open your almirah, and you are deciding, which clothes to wear. So you decide on the basis of what the weather is, who all you're meeting. Are you going to work from home? Are you going to go to the office? Are you going to the college? What is the weather outside? How are you feeling? I mean, importance, and what are the kind of dresses that you have. Now imagine if there is a smart wardrobe, right, which already knows that what are the clothes that you have inside the wardrobe, right, and what day, because it's connected to your Gmail calendar, right, and what day of the week it is, what is the weather outside, and since it's connected with your Gmail calendar, so it knows who all you're meeting today, looking at the appointment. Let's say you maintained all the appointment there. And then it also knows what you wore in the past, right? Maybe what you wore in the past with the same person who you're meeting, right? And according to this, all these factors would then help that smart wardrobe algorithm to recommend you what clothes that you should wear, right? It's not a big deal. There are now a lot of companies which have already started working on these smart wardrobes where you can easily put your clothes, which would have, very thin RFID chips, right? And they would know, the smart wardrobes would know what are the clothes which are inside, what are the clothes outside, and connected to the internet through a Wi-Fi chip, your home Wi-Fi, and it's connected to your Gmail, your Google services, including calendar and whatnot. And there you go, right? It's not really a rocket science to have something like this, right? RFID tags, yes, Gaurav Sharma. RFID is radio frequency identification tags. Those small chips that when you go to buy anything from a retail store, you would see that there is a small, almost like a printed circuit chip, which is normally embedded into your new piece of shirt or a trouser or any cloth that you're trying to buy, right? And they have it because of the security reason. And those towers, small towers right at the entrance or exit, they normally start beeping, if you're not paid and if you're giving out and so on and so forth. So it's not a really big deal. These are very cheap things, cheap tags, and very easily procurable. So if you notice here, that data science touches everybody's life, touches everything that happens around us, right? So then why not the banking and financial industry? Why not the finance industry? You see, if I were to tell you that finance industry was one of the first and foremost industry to start using data science in a very structured fashion. And do you know the reason behind it? Why do you think the finance industry was the first and the foremost user? Even till today, most of the job openings come typically because of the financial industry in the data science roles. Any reason, any idea why is that happening? Why is it that the finance industry is the foremost industry in the world to hire people in the world of data science? And why were the first ones also? Any idea? Anybody? Gaurav is saying because maximum data are covered. I mean, okay. What do you mean by maximum data? Anybody else wants to take a chance, take a stab at it? Okay, think about this, right? I don't know if you guys have learned accounting ever in your life, but I'm sure people know that when you go to a bank, right, what do you normally do? You either deposit money or you withdraw money, right? But whatever transaction that happens gets recorded in a very structured fashion, right? That's the beauty of any financial transaction, right? You can easily imagine that and when you download your statement balance or statement account, you easily see that there is description of the item, there is credit line, and there is a debit line, and then there is a balance line, right? And this kind of a format has been there since the beginning, since the conception of the banks or financial institutions, right? They've been managing their data in a very structured, standardized fashion. And they've been managing the data. That's the main beauty of it. They have been managing data. So you have all these accounting standards and statutory body around the world, all different countries also have, and then there are international laws around managing and maintaining the books of accounts for any company or of any individual as well, right? So that means the data has been, these financial institutions have been managing their data in a very structured fashion. And so that's one reason that since the financial institutions have huge amount of structured data available to them. So that's one of the main reasons. The second main reason why the financial institutions, the financial industry were the first one and are still the foremost industry to hire people in the data science world is because of the quality of data that they have. So one is, as I said, right, the first reason is structured data, that they have huge amount of structured data, and the second is high quality of data. Now, what do I mean by high quality? Anybody who can make me understand what is the meaning of high quality of data? Structured data, I'm sure everybody has understood that they store the data in a predefined structure, so there is likelihood of missing out the data is less. What is the meaning of high quality data, and why do the financial institutions have highest quality of data available to them? Any idea? Any idea? Anybody? So I'll tell you the reason, right? Let's say, can you imagine going to your bank, let's say Citibank, Standard Chartered, ICICI Bank, any of the banks that you go to, so let's say to open your bank account. Let's say you decide that, you don't want to give your phone number or your valid email ID to the bank. Can you even think of doing that, right? The bank would say, no, we are going to KYC. We are going to know your customer validation. That means we are going to verify all the data that you give to us, right? And of course, you do not want to fudge the data. You do not want to, misinform the bank that, your phone number, your address, your gender or your income is something which is not the right thing, which is not truth, right? Imagine going to a retailer, like for my example, my dad, right? When pantaloons and all were, when Flipkart and all these online e-commerce companies started, whenever he opened any account in these online e-commerce companies, the first thing he would call me up for is that, why are they asking for my phone number? Why do they need my house address? Why? So I said, if they don't have the house address, how will they deliver, right? And if they don't have your phone number, then how will they send the verification OTPs to your phone number and your valid email ID? His point was that then when I go to Pantaloons, they don't ask me for my phone number, and even if they do, I choose not to give to them, and they still allow me to buy products. So there is a huge difference between giving data to a retailer versus giving data to a bank, right? With a retailer, especially brick and mortar, like physical store retailer, even if you don't give any valid data, they're not going to be surprised with it. Nobody's going to be surprised with it. But you can't do the same with a bank. So the banks or the financial institutions have always had highest quality or truth about their customer right from the beginning, right? Since they have high volume of structured data, and that too of highest quality. So when they use their data to make any decisions, right, the quality of that decision or the result of that decision would also be of highest quality. Do you understand? So these are the two main reasons why data science has been prevalent in the BFSI industry, in the finance industry, since for a very, very long time. Is it making sense? Even today, almost 1/3 of all job openings come from within the data science industry or related to data science industry. Is it making sense, everybody? Yeah. All right. All right. Now, this is just a quick thing about us. We've been working with a lot of financial companies. You can see the list of the companies here. You will see that there are a lot of financial companies as well that we work with. Of course, we work with large companies, Fortune 50 and all. But Honeywell, we trained more than 400 people, 400 financial performance and analytics professionals from within Honeywell. ICRA is one of our clients. Nomura Research and Institute is our client. So you'll see HSBC is our client. A lot of students are also working in HSBC. So you'll see that there is a huge number of companies, and this is not just a sample list. And you would see that any such consulting company which is working in the world of data science, they would have good number of financial institutions as their clients, just because, again, as I said, that they have highest quality of data and very nicely formatted data as well. right? Now, today's agenda quickly, yeah. You've understood why there is a strong demand. I'm going to go a little further into this. I'm going to talk about a little bit more about this strong demand aspect. We will also spend good amount of time in what is the data science applications, what are the different application of data science in the financial world. We will also talk about salary, but I always say that in the world of data science, at least as it stands now and how it looks for the next almost a decade, one should not be worried about money. Okay, worry about learning, the money will follow, especially in the world of financial data science. Okay, it's the you. I'm sure everybody understands that there's a lot of money to be made in finance, right? I mean, so money is never a problem, especially in the world of financial data science. So don't worry about money per se, but if you still have any questions about salary, I'll be more than happy to take it. Now, I'll actually focus on this as well today, which is what are the strategies to get into a financial data role, right? If you really want to get into financial data, what are the steps to follow? Okay, so we'll talk about that. And in that process, if you have any other question, I'll be more than happy to take. Now, let's look at the first one. Why is there a strong demand for financial data science? Although we have already seen two reasons, two core reasons, right? But now let's go a little more specific into it. You see, financial industry expects highest ROI in any kind of investment that they make, specifically in the world of big data, right? Which kind of is the origination factor for data science, right? So since they need highest ROI, right? So that is why they want to hire people who understands data science, right? Ideal world would be that they would want a person who understands finance very well and also understand data science very well. But it's extremely difficult and it's extremely expensive to hire or to find a candidate who understands finance as well as data science very, very well. So that is why what they do is that most of the financial companies, what they do is that they hire people who have core data science skills, maybe through some data science certification courses, boot camps, or some degrees, which are from which give candidates understanding of how data science skills work, right? And they should have worked and solved problems which must have required them to work on data science, complete stack of it, right? Not just building the model, but also to be able to deploy the model in some kind of a web application or mobile application, right? If you have that kind of understanding, great, right? So that is why there is a strong demand for people who have learned data science in the world of data, in the world of finance, even if you do not know much about finance, right? Although I do recommend people that knowing a little bit of finance is not a difficult thing, right? Um, so a couple of questions that I'm seeing here. One of the question is Shreya has asked, doing MBA and she's also pursuing data science course. Very good. I mean, why not? I mean, MBA allows you to specialize in a lot of things. If you have an interest in marketing analytics, financial analytics, HR analytics, logistics, supply chain analytics, just choose your expertise, choose your interest area there. Data science can be applied there, okay, in all these industries. How does blockchain impact data science or in finance? So, all right, I mean, although this is not a blockchain focused session, towards the end, Siddharth, if I have some time, I will definitely talk about blockchain and maybe if you're interested in cryptocurrency a little bit as well. Although I wouldn't really claim myself to be a blockchain expert. However, since I'm in this digital data science industry, so you know, a lot of things are happening in the world of blockchain, so I can talk about it, at least answer some of the questions that you have. So I'll definitely try and answer that question. So that was the end, if we have some time. One of the very important thing, the third things, right, that I want to actually talk about is this, sorry, which is what are the main objectives of any financial data scientist, right? So the financial data scientist's main objective is to reduce cost, very important, and increase demand or increase revenue, and hence maximize profits. In our experience of working with large Fortune 50 organizations where we have transformed their entire finance teams or financial performance and analysis team completely from being a traditional finance focused person to becoming a financial data science focused professional, we have realized that there are two ultimate goals that any financial institutions have when they're using data science, which is to increase the revenue or increase their demand and to reduce the cost. Please remember, these are the two main value addition that your resume, when you create your resume to apply in a financial data science role or a financial data science role, then those value additions from your project should be definitely highlighted, that your project or your case study that you worked upon, what kind of money it was able to save for you. Please do ensure that that value is highlighted. Financial recruiters like to see that. And one of the beauty of working on any financial data science project is that it can be quickly highlighted as well, whether it is about reducing the cost or whether it is about increasing the demand. Remember these two very important value addition. I just want to talk about some research report as well. Ernst & Young, very famous Big Four consulting and advisory firm, they predicted last year that 57% of future financial analysts will be using predictive and prescriptive analytics. Okay, in the last couple of sessions, especially in yesterday's session, you must have learned some of the concepts like machine learning concepts, how they're used, and you must have done one case study as well with Farooq. And so that's part of predictive and prescriptive analytics. Okay, so almost 60% of the people, financial analyst folks, would actually require the data science understanding because they work with data, right? And if I look at my own experience with Ivy or Ivy's experience working with these large organizations, especially last 5-6 years, we have seen a huge demand from various, and not just from within India, but from the US, from Europe as well. Companies which are working in financial data science roles or projects, and they need desperately people who have strong understanding of data science, right? So these are the demand drivers for financial data scientists. Now, just to give you some more statistics, some facts and figures here. One of the key facts to understand here is that these are all the different data science specific roles or distribution of data science roles that we normally see in different online portals and so forth. So if you notice, right, risk analytics, which is actually one of the subsets of financial data science, 18%, and financial analytics, which is again part, plus some of the things from here and there. Consumer insight also is somehow. Sorry guys, I had to mute you guys, some background noise was coming. 33% based on overall data analysis, overall distribution of the data science jobs. 33% of the jobs in the data science industries are from BFSI industry, banking, financial services institution, or mainly the finance industry. Okay, 1/3 of overall data science jobs. Okay, so remember that it's a lot of opportunities. Don't worry about opportunities. I always say, worry about learning. Okay, and just that's the main part that you can control and you should focus on. Shreya's again, one more question is that can I become what extra skills? Definitely, Shreya, we will talk about some of the skills, specific skills as well today, Shreya. So now let's go to what are the specific applications of finance in or specific application of data science in finance, right? What are the specific applications? So these applications, you can divide them into, let's say, 6 or 7 different categories. Okay, risk analytics or risk analysis, we'll talk about each one of them a little briefly. Fraud detection, I'm sure people understand what fraud detection. Again, I'm going to talk about this as well. Consumer analytics, real-time analytics, algorithmic trading, customer data management, personalized services, right? So let's talk about them. What is risk analytics? Does anybody have any question? I heard somebody talking. Okay. I'm seeing the questions. Do not worry. I'll try and answer all these questions. BI reporting is part of descriptive diagnostic, which is not part of predictive. BI reporting is part of descriptive, right? Where you describe the data. That's right. Which is not part of predictive. Yeah, that's right. So what is your question, Siddharth? Anyway, let's Siddharth come with the question. Let me first explain each one of these with some specific examples, and let me also give you some indicative list of companies for each one of them, each one of these applications. Risk analytics is, you see, when you go to a bank to apply for, let's say, credit card or home loan or car loan, right? Bank takes some time to decide whether to give you the home loan and to of any kind of credit product, right? So they take some time. They ask you for a lot of data. They ask you for CIBIL score. They ask you for income data. They ask you for a lot of other collateral information, asset information, income information, a lot of things, gender, where you live, all that information they ask you, right? Based on all that information that they have gathered, they decide what is the probability of default, or what could be the loss given default, or meaning if we gave you the loan, or let's say you're applying for a home loan of 50 lakhs, right? You are a young working profession, just started working. Let's say your age is 20, you got recently married, your income is, let's say, 12 lakhs, and you live in a let's say you live in a tier 1 city, let's say in Bangalore, and you work in a tier 1 technology firm, let's say Accenture or whatever. So now they have gotten the data about you. Now what they will do is that they will see all their past similar profile of customers who came with similar profile, right? And their past payment, repayment of the loans, their patterns, right? And how much percentage of similar profile of people defaulted on the loan given for, let's say, an amount close to 50 lakhs on home loan, right? And if they see that the default rate was less than 1%, so they will say, you know what, your probability of default is less than 1%. Normally it could be 5%, 10%, whatever it is, right? So the idea is that when you say that when you are applying for loan, the bank makes this decision on the basis of your past, your current data and similar past customers data, right? And why are they doing so? So they're trying to reduce the risk, or reduce the exposure of the risk, right? So that's when the data science come to the picture. That's when a lot of statistical algorithms will also come to the picture. And nowadays what has started happening is that these credit decisions, which we call them as credit decisions, are taken almost in real time. Let's say you apply, let's say there is a American Express advertisement on Facebook that, hey, you apply for a credit card with a limit of 50,000 and we'll give you the real time approval. You apply now, you will get the approval right now. So that means their decision, their ability to make that credit decision has become faster. So, you upload your CIBIL score, you upload your all your demography profile data and everything. And their data, their algorithm does a real-time analysis on your profile and gives a credit decision right away, right? So that is risk analytics. A lot of applications are there. I spoke about consumer risk analytics, whereby a bank is making a decision on individual consumer. But think about a large financial institution, a global financial institution, for example, Bank of America or Citibank or Standard Chartered or even SDFC Bank, any large financial institution. They have multiple products. They have multiple credit products. They give loans not just to individuals, but they give loans to entities, right? And at any point of time, they have exposure in the market of the amount of loan they have taken. So they have to constantly do risk analytics on the exposure of the loans or the credits that they have given to other institutions, other entities, individuals, and so on and so forth, and keep submitting that report to the central bank, for example, RBI, so that RBI has a very tight control that they want to make sure that nobody fails. None of these very large banks, as they're called, too big to fail, right? They should not fail overnight. I mean, imagine what havoc it will get created if a bank like HDFC or ICICI or SBI fails overnight, and they say that no, you can't access your deposited money, right? Like how it happened with Yes Bank a couple of years ago in 2019, right? So it becomes very panicky, right? So the central bank of almost any sovereign country would try to control and understand what is the risk that these banks have taken, too big to fail banks have taken. In 2008, Lehman Brothers failed, and that resulted into global financial crisis, right? So the central banks have become smarter. They constantly ask for risk analysis report, and hence there is a strong demand for people who understands risk analysis, and it's not very difficult, right? You need to know statistical algorithms. You need to know certain tools as well. And of course, you need to know a little bit about the, how the banking system works. But this is probably the easiest out of all these. Easiest, I wouldn't really say easiest or anything, but this is probably one of the places where you have huge number of job openings. Okay. Fraud detection is any anomaly detection in the pattern. For example, let's say as a consumer, if you think about it, you have never used your debit card to buy something in foreign currency, but all of a sudden you went to some online website, and let's say you're playing games, or you buying anything, and you paid it in UK pound. So the bank will actually right away, or your bank's portal would right away reject that transaction, right? Uh, Suspecting that this is out of pattern. This is an anomaly in all of your past history of 5 years using the debit card, right? So it's an anomaly. It's an outlier. So they will say, no, we can't allow this, right? So that is to ensure that there is no fraud detection. A few years ago, not a few years ago, probably 12, 15 months ago, in fact, in my American Express card, in one day at from noon, so 12:30 p.m. or 12 noon to 5 p.m., right? I was attending my cousin's wedding, and I saw at 5 p.m. of 6 p.m. when I came back to my hotel, I saw there were 50 PayU transactions. The first transaction. Sorry, guys. The first transaction was of 500 rupees, and after gradually every transaction incremented by almost 300, 400, and the last transaction was approximately 4,000 something rupees. But there were 30 such transactions. So before I could call American Express, I had some 10 missed calls from American Express saying that, hey, something is not right with your credit card, right? So that is anomaly, right? Because American Express knows that I have never used credit card so often, and I have not used my American Express credit card to buy anything using PayU, and that too so frequently within 5 to 6 hours. So they identified that this pattern is out of the usual pattern, and they did fraud detection, and they blocked that credit card, right? So that is a classic example of fraud detection. Multiple application. Here, even if you do not know a lot of statistics, right, a lot of machine learning algorithm, but you understand, you have good reporting understanding, you have good visualization understanding, then also you can get into fraud detection. Okay. But of course, fraud detection becoming more and more advanced, because there are frauds are becoming more and more advanced. Consumer analytics, any idea what is consumer analytics, guys? Any idea about consumer analytics, guys? What will consumer buy? Very good question, very good point, right? What will consumer buy, right? Banks exactly know what you bought, when you bought, what is your age, what is your gender, do you have dependents or not. One of the companies that we worked with, I can't take the name, a few years ago, the idea was that uh, they had their all of their more than 1 crore customers uh, behavioral data of last 18 months. They said that, hey, you know what, we know how these 10 million plus customers are using their debit card and credit card, whether they're buying insurance, whether they're flying in jet airways. Jet airways is still there, whether they're buying something in Tanish, whether they're buying something at firstcry.com, whether they're buying an LIC policy. If policy buying LIC policy, then how much of the LIC policy they're buying, what is the premium amount, whether they have any any past similar healthcare policies or not. So they had all that data, and they got all that data from their credit card and debit card transactions, right? And they said that using these transactions, we want to identify, out of those 10 million customers data, they wanted to identify, they gave us a first target of identifying 100,000 leads for a new high premium life insurance policy that they had created, life insurance product. So they said you know what, our sales team keep reaching out to different customers, but we don't want to do it randomly. We already have so much of data available to us. Then why not? Yes, Bajaj Finserv or Bajaj Financial Finance or Bajaj Financial Services Finserv is a classic example. They use a lot of consumer analytics to understand who can be given credit card, who can be given what kind of loan, who probably would require loan at what point of their life, and so forth, right? So they said that let's identify these 100,000 customers from within our customers' data using their behavioral analytics, right? And they said that just give us first 100,000 leads. And when we started doing analysis, we actually found more than 100,000 very easily, right? And it was very easy, right? Anybody who has whose age is, let's say, more than 7, recently got married, buying some jewelry, flying through jet, does not have any other insurance, like high insurance policy, then but the income that they're getting in their bank account is pretty all right. So it was very easy to kind of come up with such list of customers, right? So that's consumer analytics, and it is becoming sophisticated with the help of real time, with the help of unmute yourself if you have any question. I don't mind, but yeah, if you do not have any question, please remain on mute. So with the help of real-time analytics, that means real-time data analysis, right? You might have noticed that the moment you buy, let's say, a TV of 30,000 rupees, right, you automatically get an offer from SDFC saying that, hey, you just bought a TV using SDFC Dynasty credit card. When you buy Alexa for 3,900, you will get 25% discount if you use SDFC credit card. So that's real-time analytics, right? Real-time, they're analyzing the data. Now this becomes a little more sophisticated. This also requires a lot of, this is not specifically, let's say, statistical, but it's more about being able to access huge amount of data and use AI. I'm sure Farooq spoke about AI yesterday, and deep learning algorithm to kind of categorize the customers who would most likely buy something or not buy something, right? Algorithmic trading. Algorithmic trading, do you guys know that most of the trading that happens in the stock market in today's time, the largest volume of tradings are done by softwares, by robots, right? They're not actually done by human beings, but they're done by these algorithms which algorithmic traders have created. Again, easily using and leveraging the time series data or the past data of different external factors of a particular company, fundamentals, technicals, everything can be built into it to create algorithm which will help a trader buy or sell an instrument or an asset. It could be equity, it could be commodity, it could be anything, right? So there are millions of people working in algorithmic trading. What they do is they're not like active traders. They are not really punching the orders. They're not buying and selling by themselves, but their algorithms are buying and selling automatically, and they do in very high frequency. So there is something called as HFT. You can Google high frequency trading. This is the biggest thing that is happening in the equity or in the share market and the stock market, right? So do a little bit of research. You will find a lot of application of data science there as well. Customer data management is not so much about data science per se, but since it's related to the data industry, so hence I put it over here. Customer data management is that, if you're just good in reporting, if you're just good in managing data, if you know SQL pretty well, if you know big data as well, know SQL, if you know these things which will help manage a large financial institution, their own internal customer data. Because remember, all these other parts, all these other blocks that we're talking of, can only make good decisions if the data of the customers is managed properly. So that is why customer data management is a huge opportunity area, specifically for people who are a little scared of, let's say, learning machine learning algorithms, but they don't mind learning, let's say, SQL or a little bit of big data. So they're more from technology, not so much from the business side or statistical or machine learning side, right? So there also, huge job opportunities are there, master data management and so forth. Personalized services, right? I mean, if you are a premium customer of a bank, they want to ensure that before you decide, because a premium customer will have a lot of options. A premium customer will not just bank with one bank, they will bank with multiple banks. So they want to make sure that, the services, their services that they offer to their premium customers become more and more personalized, right? Before the premium customers even think of something, they can recommend them that, hey, we see that you've not visited restaurant, your favorite restaurant in the last 3 months. Can we book that restaurant for you? So a lot of concise-based services, personalized services have also started. The banks, the financial institutions have also started proposing to their customers that let us book. So it's called as concierge service, right? American Express is famous for providing a personalized service, and that too is basis the data, right? Instead of pitching all different products that the bank has, they say that, you know what, why not just pitch golfing resort vacation? Somebody who's Priyadarshini, you have a question? Okay, no. Right, so that's the next big thing that is happening. Okay, so I'm going to go to the next slide. So this, I think, more or less everybody has understood, right? What are the different applications of data science, specifically in the world of financial industry, right? Now, specifically, becoming a little more specific here, if I were to categorize the industry into 3 different categories, right? Financial industry, 3 different categories. One is banking and financial institutions. So they have financial risk analytics rules. They have compliance analytics rules, AML, and which basically stops the process of any income through illegal actions and so on and so forth. Anti-money laundering, I mean, a lot of international banks have anti-money laundering service as well, or division, which is again based on a lot of data science, right? They want to understand that, hey, is there a spike in cash transaction in certain banks, right? And they have to report. Now there are international laws behind it as well to report, FATCA and whatnot, which again requires people who not, let's say, are sophisticated data scientists, but who still understand how to work with data. A lot of good roles, not so much of a high salary, but good roles, good number of roles as well here. Marketing analytics, as I said, consumer behavior analytics, right? Algorithmic trading, we have spoken about that also. Financial performance and financial planning and analysis of financial planning and analytics of financial performance analysis. Different companies call it differently, but it's called as FP&A as a short form. You will see a lot of financial analyst roles are there, right? For example, I took an example of Honeywell, where we did train their 450 plus folks who were part of FP&A. So there are a lot of these companies who have people working in the financial analyst role, where they create various kind of cost reduction reports and various kind of revenue efficiency reports, right? Supply chain analytics, customer churn analytics, vendor optimization. So basically, where the money is spent and where is the money coming? So income. So expenditure and income. So they keep creating reports, and then they keep forecasting what could happen in the future, right? So it's again a very, very big area where you'll find a lot of job openings, FP&A analytics, okay, or financial performance and analysis, right? And remember, this is not just that, they are actually working in finance data per se, as we understand, credit and debit data, but they're actually also looking at where the money is, what are the different sources of money, and what are the different channels where we are spending money, and what is the ROI of those channels. So that also comes under financial planning and analysis, right? And actual analysis. Now, this is again specifically for people who are in risk, people who come with actual background, or people who have done FRM or have some risk management background, or want to get into that. Very sophisticated modeling, right? Especially, imagine, how do the companies decide? How do these insurance companies decide what should be the insurance amount or premium amount that somebody should need to pay, basis the age, basis the amount of insurance that he's taking, sum of insurance he's taking, or he or she is taking. So all that modeling, all that data analysis is done by actual analysts. It's a very sophisticated role, but it's a high-paying role. Very, very high paying. One of the toughest job roles probably to get into in the world of financial data science. But if you have a background in actual science, or if you have interest, you can definitely explore. So I know I've got 5-7 minutes. I want to talk about one very important thing, that what are the things that you need to learn, right? What is the first thing that one should learn? The first thing that one should learn, and you might have realized in the last 2 sessions, is that you first need to learn the entire data science workflow. Now, what is the meaning of the entire data science workflow? What is the first thing that we do? And it is almost irrespective of which domain that you're applying data science in. The first thing that you do is you extract data. Where are you extracting data from? Let's say in a bank, right? You have these databases where the customer, so whenever you transact something, the data gets stored in a database, right? So the data extraction needs to be done by the data folks. And I will tell you, where different roles will come into the picture, okay? In fact, I do something for my self here. So I'm just referring to it. So just to ensure that I cover all the points within this as well, right? For example, here, this is where the data will come from something called as some kind of a business process. And the business process could be, let's say, all the transactions done by the customers, right? And then, but the data is not in the right format typically, or it has maybe errors, some errors in it. So you clean the data, you reformat and clean the data. This also requires a lot of people here, right? So this is these two phases. First phase is called as preparation phases. You're preparing the data for analysis. You're not doing analysis. There is a lot of job roles available here, there as well. Then you go into something called as experimentation, right? So experimentation is, let's take an example, right? Let's say I want to launch a new credit card into the industry, right? Into the market. Now I'm trying to understand that who are going to be the customers who will buy, who will be willing to take this new credit card that I'm coming up with, and how many customers do I really think will actually be willing to buy. Remember, I gave you an example of 100,000 to find the 100,000 leads for a high premium insurance product earlier. So similarly, the financial company or institutions may be launching a new credit card, right? So they want to now hypothesize meaning that, okay, they will say that, what, looking at some past data, we can say with some confidence that, let's say 1 million customers will be willing to buy this new credit card from us, willing to take this new credit. But in order to validate this hypothesis, right, they will need to transform the data, which is now cleaned, and visualize. So they will create a lot of reports, who are the kind of customers who have bought similar credit card and what was their pattern, and a lot of data, a lot of visualization they will do to kind of figure out that what is going on, what has happened in the past, which is prescriptive, right? Prescriptive analytics. And then accordingly, they will build a model. They will say that, what, when we launched a similar credit card 1 year ago, similar, maybe a little lower limit, maybe a little lower this thing. So we were able to, and these were the factors which influence a customer to take. And these were the kind of customers who took. These were the profile data of those customers who took this credit card from us, right? So they will build a model. A model, as you must have learned yesterday, is just a set of factors which will influence the decision to take the credit card, not to take the credit card, right? Again, you do that on the basis of past data. So this is called as experimentation phase, where you're experimenting a lot with the data, right? Then finally, you create the reports for distribution to decision makers, and you also deploy. So when I say deploy, what does it mean? Deploy means, this is again one of the very, very important things, sorry about that, very, very important thing that modern financial data science guys do. They create reports. Let's say these are all different reports that you've created, and you created a dashboard as well. I'm sure in the first session you learned with Ishani how to create dashboards. So you created a very nice looking dashboard with a lot of different charts and so forth, right? Now that dashboard needs to be not sent like an Excel form or a PDF form, but it should be available somewhere on an app, maybe a mobile app, maybe a web app, right? A desktop app. So that is called as deployment, right? So the data science guys work with some of the software engineers as well very closely to deploy their final reports in a nice looking web app or a mobile app, so that the decision makers then use those apps to make the decisions quickly. Or let's say I am a sales manager in a particular region in ICICI Bank. I have been given a task to sell 1,000 credit cards in 1 week. So I have a team of 10 sales associate with me who are going to go into the field or maybe going to call the customers. So I need to know that I've got a database of 10,000 customers. Whom should I call first? So this app, this decision-making app will quickly reflect that, what your today's task is, that you target these customers. It will go into such detail that it will actually also give a list of those customers as well. Or maybe it'll give you, some reports saying that identify the customers who are male, whose age is between 30 and 35, whose income is more than 10 lakhs, who are living in tier 1 city, or these pin codes, and they would have 90% likelihood to say yes to this new credit card that you're trying to launch, that you're trying to sell, right? So this becomes, now the sales guys do not have the time and do not have the skill to really go and do the data analysis. They need an app, or they need a nicely, easily understood dashboard, right, on their mobile smartphone or on their laptops, right? So that is called the deployment of the final of the final reports and the algorithm that you have created. And this is what you need to learn completely if you want to get into a pure financial data scientist role. Now, this is complete role end to end. Again, as I said, there are roles which one can get into in different phases. As I said, if you do not like statistical algorithms, if you do not like machine learning, you can limit yourself here. Learn SQL, learn Tableau. Not even Tableau, Excel, a little bit of databases there, and become a data management expert here. Okay, in the first phase, let's call it as the first phase. Now, if you are a little bit into, you're not afraid of statistical algorithm, which I say one should not be, and machine learning algorithms, then you can get into you can easily get into experimentation roles as well. You can be called as a junior data scientist, or a data analyst, or a statistical analyst, or a different role, business analytics professional, whatever. Different banks call it differently, or different financial institutions call it differently. And if you know everything, that means the data management part, the experimentation or the machine learning algorithm part, and also the deployment part, then you can actually start working as a pure data scientist, or a full stack data scientist, maybe a junior one to start with, right? That means, you need to know a little bit of deployment as well. Does it make sense, guys? So this is the complete workflow. Now, I've got 5 minutes here, guys. I'm going to open the floor for questions. What questions do you guys have? You understood this, guys? And this is what we cover in our diploma. Ivy covers in our Ivy's diploma in data science program. Covers everything, right from data extraction, data management, to experimentation, statistical algorithm, machine learning, and to deployment, right? So if you want to become a pure data scientist, or full stack data scientist as we call, then you may want to explore our diploma in data science program. Now, I'm opening the floor for questions. What questions do you guys have?
Hi, Pratik.
Yeah.
Yeah, this is Gaurav. See, I am basically now having 4 to 5 years of experience in sales. All right.
Yeah.
So
Yeah.
no background in finance. So done my BTech and then did my MBA
I
as well.
understood your question, Gaurav. Maybe I'll interrupt
Yeah.
you in the interest of time. I understood that, if you do not have any background in finance, then how can you
Yeah.
get into in
Yes.
finance?
Will I
You
be
see,
employable? That is my question.
yeah. So, and what I suggest is, whenever somebody tells me that I've spent some significant years, which is 3, 4, 5 years of, or plus years of experience in a particular domain, then first question comes to my mind is, why change the domain? Because data science is applied a lot in sales and marketing analytics industry, and there the companies will need people like you, people who come with pure sales background and understand data science as well. Or if you want to get into financial data science specifically, I can think of a few examples from our students community. They went into marketing analytics of, like, your consumer analytics or sales and marketing analytics within a banking firm or within a financial institution, right? Don't try and
Okay.
explore risk analytics there. Try and work on case studies, projects which are more towards cross-selling, upselling financial products to the consumer. Do you understand what I'm saying, Gaurav?
Yes. Yes. Thank you.
Don't
Got it.
don't miss out on the experience that you have gained by having worked in the industry. Which tools are used for deployment? Shreya, so as part of the machine learning algorithm, I'm going to just skip that part. There are a lot of things that you will learn as part of this: Shiny, Flask, Docker, Dozo, Django, and so forth. Those are the tools which help you to deploy the machine learning algorithm on cloud, or on a cloud-based web app or a mobile app. Not very difficult. Siddharth's question is, will machine learning take over DS role? I mean, see, the way I define this, and these are all subjective definitions, Siddharth. The way I define data science is that it's an umbrella term which includes almost everything except for the deep learning part. So if I were to say that if I were to create Venn diagrams, then I would say, let's say this is data science, right? And I would say here is, let's say this is AI, and this is deep learning, right? And this is machine learning. Machine learning is a sort of statistical tool which will help you do predictive, analytics using supervised unsupervised algorithm. And let's say this is data visualization, right? So data science is set of techniques and tools and strategies which help a human being make a decision, right? Whereas artificial intelligence is a set of tools, techniques, computational algorithms which make a machine mimic human decisions, right? So if you look at this as AI, deep learning is part of this, right? So, and machine learning is pretty much part of data science as well, is how I describe it, right? But again, if you ask 5 data scientists, they will have a different definition of machine learning. So to answer your question, whether machine learning will take over a job of a data scientist, I say that, machine learning is actually pretty much one of the core skills that a data scientist should have. Chandrakant's question is, he's in 3rd year IT engineer student. How can you listen? I mean, start working on the project. See, I mean, I've got a strategy as well here. What is the strategy? Of course, I'm from Ivy, so I would talk about Ivy's diploma in data science course. There are a lot of free courses we have given on YouTube, our YouTube platform as well. The link is given, or you can just Google IvyProSchool YouTube. Start learning and start doing. This is very important that you start doing. This is one of the very, very important things that you should do is start doing it, project basis, right? I mean, as part of IB's courses as well, you work on 30 plus projects and case studies, right? So, and we give internship opportunities again to kind of make people confident in what they have learned, in applying those whatever they have learned. And when we give them projects, and these are not just dummy projects, these are projects, projects by Uber, HSBC, Accenture, Music. There are so many different companies, real life data science, Swiggy, Ola, Oyo. There are so many projects that they work on. So, when you work on these projects, when you have a project-based learning focus, then, you have something to substantiate, to provide a, evidence that you've learned and applied. Companies want to see what your application level knowledge is, not just what you've learned, right? And one very important thing is that learn deployment skills, how to deploy. They're not actually difficult at all. A lot of people get scared of this because this sounds technology oriented, but it's not really difficult. If you learn this, right? And also if you're specifically interested in finance, just start reading Financial Times, any economics times or Business Standard or Mint. Start reading from today every day for at least 45 minutes. Start learning those terminologies which you find difficult to understand. They're not difficult. That's how I have learned most of the things that I know in finance. I'm a computer engineer who did a MS in operations management and information systems, and I worked in strategy, but most of my clients were financial clients, right? So that's how I've learned, right? Salary, Deepak, do not worry. I mean, the average financial data scientist salary is upwards of 15 lakhs, average. So Deepak, do not worry about money in the world of data science, especially in financial data science world. Yes, there are maybe. So Shreya, you can probably ping me later. I can explain you what maybe not there in that particular course module. I think the AI part is not there in that particular course module. The rest of the things are all there. One other question that was there, since we have a little bit of time, how does blockchain impact the data science industry? So blockchain is also helping us. So what is blockchain, right? Blockchain is that, for example, before the blockchain became prevalent, or I mean, still is not very, very prevalent. See, let's say person A is giving money to person B, right? There are two different people. One is giving money to person B. Now, if it is not a cash transaction, right? So they would go through a bank. The bank would say, you know what, I am A is my customer, and my customer gave an instruction to give money. It's not a directly transfer money to a customer B. So the bank keeps a transaction record, which can be held in the court of law, saying that, hey, if person B claims that, hey, I did not receive any money from person A. So person A can say that, you know what, let me show you my bank statement. And he will get an affidavit also from the bank saying that, hey, yes, the person A transferred this amount to this particular account which is on person's B's name, right? So it's a record keeper, right? Similarly, in blockchain, what happens is, instead of one centralized bank which is keeping the record of the transaction, there are multiple people in the chain. So let's say if person A is here and person B is here, person A transfers money to person B. This transaction is not just recorded in their books of accounts, but is recorded in everybody who's part of that blockchain. Let's say these are all different people who are there, who are part of these chain of transactions. So they all get entry of a sort that, hey, person A has transferred to person B. So there is no centralized record keeper, but the entire chain is keeping that record. So that is why it becomes a distributed, decentralized record keeping. So now what is happening with this is that earlier the data was limited to a central bank. I mean, like to a bank, right? But here the data is now getting distributed to so many different people. Does make sense? So one of the very important ways that the blockchain might affect the banks is that a lot of people may start using blockchain bypassing the central bank infrastructure to do transactions, right? But what is the latest thing that you would notice is that a lot of banking financial institutions are launching their own blockchain network. That means they're saying that, all right, do not just rely on us, but this blockchain is connected to, let's say ICICI is launching a blockchain network which is connected to HDFC's network, which is connected to Citibank's network, which is connected to Standard Chartered's network. So every bank is interconnected through that chain of through that blockchain. Do you understand what I'm trying to say? So yes, it kind of threatens what bank is doing, but banks are also becoming smarter, right? So again, the idea is that it generates even more data. So Rahul's question is, will Ivy assess for getting jobs? Well, I mean, Rahul, that's one of the things that we of course do. I mean, you can go to our LinkedIn page and you can see some of the recent job posting. You can go to our website, download some career transition handbook, which is right there on the desktop. I mean, on the homepage. So you'll see the stories. I mean, see the success stories, people who have transformed from where to where. But remember, Rahul, it's again, as I said, right? Data science is an industry where there are so many openings. Just if you go to LinkedIn, right? I mean, I always say that just go to LinkedIn, you will find. If I just go to LinkedIn, I'm not even going to Indeed, I'm not even going to Naukri, Monster, or anything. I'm just going to go to LinkedIn here. I look for data science jobs, right? And I do a search, right? Now, of course, there are jobs here, but I will not even go to jobs. I will go to post. Posts are something that people have given the post, right? So look at 650, almost 650 job posts are there, which are regarding the openings in the world of data science. So what I'm trying to say is that if there are so many people who are hiring, right, in the world of data science, and let's say if you again, you can filter it by date posted, you can filter by location, and then if I don't do a this thing, right, if I do all, and if I simply do jobs here, so you'll see approximately 20,000 last time checked. Okay, 17,000 last I checked, it was around 19,000 a couple of weeks back, right? And so you'll see a lot of openings, right, which are there in the world of data science. So don't worry about in terms of whether there are opportunities or not, but these opportunities are there for people who are relevantly skilled and can substantiate their skills. So become social with your skills. If you go to some of our students profiles, right, I mean, let's say I'm going to go to one of my recently passed students. If you look at her profile, right, I mean, I'm just so she was actually a BCom, again a finance student, commerce student. In fact, she got a very good job in this company Nina Opel, which is headed by some of the IITians. Very good, not exactly a startup now, but very good paymaster and very good kind of work that they do. They famously hire only people from tier 1 college, and tier 1 tech colleges normally, but they have hired her as well. But look at her profile, right? Her featured profile is filled with the project that she's done as part of the, right? And there are so many people who have liked this project. 232 people liked it. You will find 111 people liked it. All these projects, 291 people liked her profile. So if you notice, right, I mean, what I'm trying to tell you is that look at this 2020 grad. She graduated right in the middle of pandemic, right? And she got, by the end of it, she got more than a few offers, right? So what makes sense here is that work, just not certification, just not the course, but work on the projects. And that's what we try and do in our two things that we keep focusing on. You know, we kind of follow what Steve Jobs said, that build a great product and then build a great marketing strategy around that product. So we build a lot of marketable skills in our students by virtue of making them work on various different projects, right? And then we help them build social profile, a solid social resume, right? So that they can actually market. If I showed her, if I showed you guys her profile, you will actually see what I'm talking about. I know I've taken a few extra time, but look at her profile. Of course, her name is redacted. So look at her resume. Her resume, if you notice, in all her projects audited, the first page. Now remember, she's a commerce student, fresh college grad commerce students, but projects in data science, data visualization, storytelling, all projects. And for every project, she has given a public link. And if I go to the public link, actually, um, I'll go to these projects over here. And as a recruiter, if I open, maybe I'll not open all of the projects because her resume is filled with such projects and her social links. Remember, she's just a BCom grad, but filled with projects, right? And lists are given. So as a recruiter, I may just open one or two such projects and see what she has done. And if I see that 200 plus people, 100 plus people have liked it, commented, then what other proof do I need to get on her skill set, right? So that's how we now make our students create a social resume, not just don't. And every project, right? I mean, for every project, I'm going to show you one of the projects actually. For every project, what she has done is, I mean, what we make our students do nowadays is that we make them work on, and we make them create videos, a small video of less than 3 to 4 minutes, every project, right? And we host the good projects as well on our YouTube platform. When you create a project video like this, that means you're also showcasing your presentation skills. See, earlier we used to make our students do presentation skills only only in the classroom, but now we have made them public, we have made them social, right? So in fact, if you go to our YouTube platform, there is a specific playlist where we have hosted some of our good students, I mean good projects by our students. So it's industry projects by students, so you can actually see some of the project inspiration. You'll of course find projects where people have done projects from multiple domains. I mean, data visualization, data reporting, to dashboarding, to machine learning, to statistical algorithm, to SQL, various different things. But yeah, so the need of the hour is to be able to create a profile as strong as this, where you are confident enough to project, to let the entire world know what you know, and have peer reviews done. It's like when you go to buy something on Amazon, the first thing that you see is that the customer reviews. Similarly, here, when your projects become social and people are commenting on it, liking those projects, right? So as a recruiter, when I see some resumes like that, and when I open any such social project, I mean, project which is socially available and people have commented and they've said that they really, really like, 100 people have said they really like it, then there's no other uh, substantiation that I need, right, guys? All right, guys. Thanks a lot for attending today's workshop. It was great having you here, guys. I'm going to give you my email ID. Feel free to get connected with me. Also, I'm going to give you my LinkedIn profile. So if you just Google Pratik Agarwal Ivy, you'll find me as the first link. Feel free to get connected. Send me an invite. I'll be more than happy. These are the two platforms, LinkedIn as well, Twitter as well. I remain active. So these are the only two platforms, social platforms that I how do you apply for this diploma in data science program? I mean, you can apply from our website. You can go to our website, Rahul Rutvi, but you can also just send an email to info@ivyproSchool.com. I mean, everything is there on our website as well, but you can just send a email as well, and we will respond there. Or you can just reach out to me as well, and I'll be more than happy to help you. Let me see if I can find that link quickly for you. Yeah. Alrighty, guys. Great having you guys here today. Yeah, I'll be more than happy to answer any of your questions that you have. I'll be here for the next 2-3 minutes. But thanks a lot for joining in today, guys. And I hope to see you guys again. whenever I see you next. Yeah. Thanks a lot, guys. Don't forget to get connected with me on LinkedIn and maybe on Twitter. I'll be more than happy to get connected with you all. Thank you, everybody. Stay safe and enjoy. Take care. Bye-bye.
Thank you, sir.
Thank you.